It's time to talk about your money here on Good Morning Quad Cities. And this week we're starting with what happened last week. On Friday, global stock markets plummeted over concerns of that new COVID-19 variant Omicron that was recently detected in South Africa. Take a look at what happened in the U.S. stock market. The S&P 500 fell 106 points. The NASDAQ lost 353 points, while the Dow Jones Industrial Average fell 905 points. That was its largest daily decline this year. Now, you might be wondering, like I did, what does COVID-19 have to do with stocks and vice versa? Well, joining us live to explain what in tarnation is going on in the world is Mark Grevicheski from the Quad Cities Investment Group. Good morning, Mark.
Morning to you, Angie. Hope you had a great Thanksgiving weekend, but unfortunately, Friday wasn't a really good day for market investors. Now, we are seeing a nice rebound in the stock market in pre-market trading, Angie. Right now, the Dow is trading up about 250, 260 points. So hopefully that carries on through the rest of the trading day. But not a lot is known about this new strain, and it's raised significant alarm bells. And, this global sell-off in stocks we saw on Friday is really about the unknowns of this variant. How contagious is it? What's the mortality rate? Does the current set of vaccines protect us against it? And from an economic standpoint, and that's what all this was on Friday, does this new variant force nations around the world to start closing their borders again and to reimpose those government mandates and restrictions on businesses and consumers?
Yeah, absolutely. And businesses obviously do not want to see those restrictions put back into place again, especially now that we're into the holiday shopping season. And this weekend really kicked things into high gear. More than 158 million Americans expected to shop starting on Thanksgiving through today, which of course is known as Cyber Monday. Mark, how are things looking this year?
Despite this high inflation, Angie, holiday sales this year are expected to be fairly strong. Sales are expected to grow by 8.5% to 10.5% over last season. Americans will spend upwards of $859 billion on holiday-related purchases, which would be a new record high. On average, consumers will spend about $997 each on holiday shopping. So overall, Angie, retailers are quite optimistic about this year's holiday season.
Mark, does this surprise you at all, especially with consumer prices being as high as they are? We've been talking about for weeks now.
We certainly have been, and obviously everybody is seeing the impact of this inflation. And I do think you have to put this 8.5% to 10.5% growth forecast in some type of perspective. I think a large part of that gain, Angie, comes from having an inflation rate of 6.2%, which means that on average, consumer prices are already 6.2% higher than they were last year. But then look how much prices have increased for many of the more popular Christmas gifts people historically buy. Over the last 12 months, Angie, prices have risen 4.3% on apparel, 6.1% on jewelry and watches. Computer prices are up 8.4%. TVs up 10.4%. So, in my opinion, Angie, when you do adjust for inflation, I think it would likely bring this year's projected sales growth down from that, 8.5% to 10.5% range and more likely closer to the 5-year average of about 4.4%.
And has any data come in yet on how holiday shopping has been going so far ever since Thanksgiving?
The initial analytics, Angie, indicate that so far this has been, I guess you can consider a fairly strong 5-day shopping weekend. We got one more day today. But again, Angie, the big picture is really the entire November, December retail holiday shopping season. In years past, we've had a strong November, only to have a December sales, literally fall off of a cliff. So we'll have to wait until the final numbers and data comes out in January before we can really make any type of final assessment.
Yep, sounds good. Mark, thank you so much for your expertise and time this morning.
Good to see you again, Angie. Enjoy the rest of your week.
Yes, you as well.